So for a beginner investor, for someone like Bryce or I who has tried and failed to get their heads around technical analysis, what are some of the key indicators that you're looking at when doing this technical analysis?
Sure. Well, look, the good news is it doesn't have to be complicated. And as you said, look, I've been around for quite a long time, over 2 decades of practicing technical analysis, and I've studied every type of technical analysis that there is, and back tested most of the various strategies out there. And after over 2 decades of using technical analysis, I've actually settled on probably the simplest tools out of everything I've investigated over that time frame. So that's good news. I think basically the highest probability comes from simply following the trend. And it sounds like the simplest thing to do, but it's often the hardest thing to actually carry out in practice, because you think about what following the trend means. I mean, obviously, it's pretty straightforward. You want to buy uptrends, you want to sell downtrends, or get out of downtrends. But buying an uptrend, at some stage, it's going to force you to do something very, very uncomfortable, and that is to buy a stock that started bottom left on the chart and finished top right. And most people really struggle to do that because they automatically think, okay, this thing's too expensive. As soon as I buy it, it's going to go down. Look, that happened the last 10 times I bought something. It went straight down. But if you do the analysis, you actually do the back testing and the study, trends, the probability actually lies with sticking with a trend. And if we kind of pull that back a little bit to the fundamentals, and we talked about the fundamentals of demand and supply, the only way you can get a chart to look bottom left, top right is if there is a tremendous amount of demand in the system for that particular security, and at the same time there's very little supply. You think about it, the technical analysis, sure, it looks backwards, I get that. And people say, Carl, technical analysis is like driving a car looking in the rearview mirror. But the people who are trading, not the technical analysts, the people who are trading based upon fundamentals looking into the future. So that top right point, as much as you think it's going to go down as soon as you buy, it's not based upon the past, it's based upon expectations of the future, and it's at a point where demand is very great and supply is very small. Demand is great because people want to be in, supply is very small because nobody wants to sell. So when you're buying that trend, have that in the back of your mind. So first and foremost, follow the trend. That's the major thing. I can go into some of the ways you can do that if you like, but that's, I think, the simplest place to start and the best place to start.
Certainly agree that looking at a chart that is, at all-time highs or going left to right pretty quickly and forcing yourself to buy in is a very difficult thing to do. So would love to unpack a little bit about that in a moment if we can. But you mentioned at the top that you're classically trained, as you said, when it comes to the fundamental side of investing. You're now in the technical side. Are you able to give the bull case as to the advantages of technical trading, or why focusing on technicals is your sort of preferred option now over perhaps Ren and I, who are looking at balance sheets and I guess different elements to the investing process?
Yeah, well, okay. I mean, this is very interesting. I mean, I definitely started out that way, and I found that you can. If you try hard enough, you're going to find the beauty in anything you wanted to find the beauty in. I think that's a problem. So